Well, welcome everyone. On my website, I've got 3 opportunities for you to learn how to trade and profit like a pro. Today, what I'm going to talk about is our opportunity under Options Pro. Options Pro is a combination of 2 strategies that I use. One is to actually swing trade calls and puts on financially strong stocks, and that's excellent during a trending market. But the market only trends about 25–30% of the time. The other time it is going sideways, it's channeling. That's why under Options Pro, the second part of that is to learn how to sell premium. And we do this on vertical spreads. And that's what I'm going to be discussing today. Now, the other 2 opportunities or programs that I have on the website are, one's called SPX War, and that's where I sell vertical spreads on the SPX when it gets overbought and oversold. To date, we're up greater than 200% on that program. The other one is ETF hedging, where I teach how to hedge using indices to protect your portfolio. I am a professional. This is how I make my living. I've been trading for 35+ years. I'm a hedge fund manager. This, I don't, a lot of people teach because they don't know how to do. I have done, and I do. And this is how I continue to make my living. However, I'm getting to the point in my career where it's time to give back, and that's why I started teaching, and I found out I have a real passion for it. So this is what I now do, spend most of my time teaching people like yourself how to trade the stock market and make money. It's a very, very difficult thing to do. Very difficult. I've been a keynote speaker with a number of different people: Money Block, Trade Monster, Investors Inspiration, Metastock, The Money Show, Value Charts, and Microquant. I've written 3 financial books, and I am the founder of what I believe is the very best educational website available today, and that is www.optionsinfinity.com. Everything I teach is what I do. I do it in either my hedge fund or my personal accounts. So I'm not just teaching something that I've pulled out of the air. This is how I make my living. Now, as I'm going through my presentation today, if you have any questions, I've got the question box open. Any questions, go ahead and type them in the question box, and I will stop and address them for you right away. What I want to do today is talk about financially strong stocks. Financially strong stocks outperform the market. I'm going to show you the list of 2017 financially strong stocks. We're going to talk about the indicators that I use. The regression channel. The regression channel I've been using for many years. I used to calculate it by hand. Platforms like Thinkorswim and others now do it automatically. It's just a matter of clicking a button, which is really amazing. Use money flow index, macro MACD, which is something that I have developed, and of course Fibonacci extensions. We'll talk a little bit about the leverage of in the money options. Then I want to go over some actual trades, and I want to go over a couple trades that I am currently in. Then we're going to swing over and talk about credit spread mastery. And we'll finish up by just showing you some records, and then we're gonna take a quick visit over to my website and show you how you can get involved. And the first thing I want you to do is become a free member. A free member. There's so much information on that website. I want you to listen to it. I want you to see, hey, does Dale make sense? This is the kind of stuff that I can use? Is this what I want to do? Okay, so I'm going to show you that on our website, and I hope you all become free members and learn and see if this makes sense for you. Financially strong companies outperform the general market. And here's just an example of three. One is Priceline. Priceline is this right here. Then we've got Cummins Engine, and we have Amazon. What I did is I used bigcharts.com, and this black line down here is the SPY that has been normalized over the last 10 years. So what you're seeing is, how did these stocks perform versus the SPX? And you can see that they not only did better, but they blew them away. Priceline, 3,000% better than the SPX. Amazon, 2,000%. Cummins Engine, well, a measly 400% better than the SPY. This is why the crux or the market basket that I use begins with these financially strong companies. Now, one of the things that's interesting is when, you know, the bigger they are, the harder they fall. When they fall pretty rapidly. Well, you know, we can get puts and take advantage of that. What I'm looking for is a positive trend in cash from operations. The Wall Street Journal and all the financial, they talk about the net income, the earnings. It's earnings season. As a business person, people know that it's cash from operations, which really is all the money the company made. That's what you need to focus on. The cash flow statement begins with the net income, and then it makes some adjustments for depreciation. It makes some adjustments for working capital. I want a positive trend in cash from operations. This is an example of a corporation that went from 5 billion up to 16 billion in the last 4 years. That's the kind of company that I want. And this just happened to be Amazon. Now here's a list of the 2017 financially strong stocks. These are what I do every year is I look first of all at which are the very best market sectors. Which are the very best market sectors? Then I'm looking at what are the best of the best stocks within that market sector, and I come up with this list. And all my members get a copy of this list every year. I put this together usually about mid to end of March, once all the publicly available information is out there. This session, by the way, is recorded. You can always go back and get this list or become a member and get it. The indicators that I use, I like to keep my trading simple. I think it's important that you find a system that works for you, that's robust, that only has a very few things that you're looking at. If you have stochastics and you have the Aroon indicator and you have the RSI, I mean, you're going to be able to make a case for anything. That's not the way to do it. Pick the very best indicators and just go with it. Keep it simple. The first one I like is the regression channel. The regression channel is this purple line is the regression line. It is calculated by 50% of the price being below and 50% of the price being above. So the regression line is a beautiful trend line, if you will. Then the green line is the +1 and ±1 standard deviation. And I'll talk about that in a second. This is +2 and -2 standard deviation. This tells me when a stock is overbought or oversold. When I make a trade, I want to make sure that the money flow, which is the number of shares outstanding times the price times the volume divided by some number. But basically, I want the money flow index going in the direction of the trade I want to make. When it does that, I come over to the right-hand side, and I'm looking for the macro MACD, which is the daily version of the weekly MACD. I want to see a change in color, and I want 3 days, ready, set, go, and then I want to get in there, and I follow it with the exponential moving average line. I look at a ribbon. This is the 5, this is the 8, and this is the 13-day. And these are the Fibonacci numbers. That's all I look at. It's a very, very powerful strategy. Okay, let's talk a little bit more about the regression channel. Like I mentioned, the purple line is the regression line. The green is the plus and minus 1 standard deviation. The gold is plus or minus 2. Well, what does that mean? Well, plus or minus 1 standard deviation means that 68.2% of all price will be contained within this section. Okay, when I look at 2 standard deviations, I'm now looking at 95% of all prices will be contained within the gold lines. Every once in a while you get an outlier, but this is a pretty doggone good indication of when you have something that's oversold and when you have something that's overbought. I've been using this for many, many, many years, and it works exceptionally well. Now the MACD, everybody's familiar with the MACD. The MACD is basically the 12-period EMA minus the 26-period EMA. And then you have the signal line, which is the 9-period. This is the daily MACD, and unfortunately, it whipsaws a lot. You can see how it's whipsawing. And this histogram just shows you the difference between the two. When the histogram starts changing, that's when I'm interested. But I'm looking at the daily version of the weekly MACD. The weekly MACD has less noise in it. It's a more accurate measure of when things have changed. Let's talk about the leverage of in-the-money options. And what I look at is about 10% in the money. In this example I have is Microsoft. Way back in February of last year, Microsoft was worth $49. So if you buy 100 shares of that, it's going to be close to $5,000. It went to 56 in 2 months, which was a nice little increase of 14.3%. That's beautiful. That's beautiful. Let's take a look at a 10% in the money call on Microsoft. I go out about 2 to 3 months. We'll go with the June 44 call at $6.73. So I can control 100 shares of Microsoft for $673. I don't need to spend close to $5,000. I can spend $673. Now it has a delta of 0.8. What does that mean? That means that for every dollar that the underlying stock moves, a 10% in the money call will move about 80 cents. So I've got an instrument that is really inexpensive that's going to perform almost like the underlying stock. And it went up to 12.4 or $567. Not as much as the stock did, but that's 84% return versus 14.3. Now, a lot of people say you shouldn't be buying options, that they're going to expire worthless. And that is a false statement. The reason I love options is because of this leverage. You know, this is the amount of money you have at risk and nothing more. It can't go minus. The other thing about options is if you pick the proper timing, you can get explosive returns very quickly. Now you got to have a way of getting out, and nobody has 100% right. So you got to be prepared to take a loss. Here's just a couple of examples. This is Apple, and the reason I'm looking at Apple is I caught Apple on the way up, and I caught Apple on the way down. Let's take a look at the left-hand side, okay? This is right around here. Apple was oversold at that point. It was down to the -1 on the regression channel. It was down to support. The money flow was starting to come back up. The right-hand side showed a change in color. And then we gave a ready, set, go, and off we went. And it just followed that ribbon on up. This is the Fibonacci number. When it gets to about 161, 261, that is a wonderful time to take profits. With options, you want to take profits when it's going with you. You don't want to wait till it starts going down against you, because that premium is going to erode very quickly. If I were to get out of the option right here, it would be a lot more profitable than waiting to get out here, a lot more. Okay, we caught it going down too. We caught it going down. Change of color, ready, set, go, ribbon crossed over, boom, down it goes, down it goes. And we're talking about profits of 100%. And this was a period of less than a month where we caught that. This was 110% in just a little bit more than a month. This happens all the time. If you have a combination of something that's oversold and the money flow starts coming back into it, and you get a ready, set, go on the macro MACD, and it goes off to the races and you follow it with the ribbon, you've got an excellent, excellent trade. Same thing's true on the downside. That's why I wanted to show this. The same, it's just the reverse. You have something that's overbought. The money flows going with you. You get a change of color and a ready, set, go, and it crosses over the ribbon. You follow that ribbon on down till you get to a Fibonacci extension and you're out. How do I get out if I have a loss? When it crosses back over this ribbon, I'm out. And historically, that's usually about a 20 to 25% loss compared to an average of about 50 to 60% when I have gains. And the gains are more than 50%. So that is a profitable strategy that your job is to just execute the trades and stay with it. Execute the trades and stay with it. This is a recent one on Nike where we made 137%. You can see we had a change in color right here. We had the ready, set, go right here. Just followed the ribbon on down. We got the 261 on the Fibonacci's, and bam, this was our exit. This is our exit. So we know what we're going to exit even before we enter. And that's the way you want to trade the options. You got to know what you're going to exit before you enter. Okay, let me just show you a couple that I'm currently in. This is the Thinkorswim platform. I am not affiliated with Thinkorswim, but I happen to think they're one of the best available today. We got into Clorox back here on 322. Let's see where 322 is. Right there. Right there. We got in, and you can see the Clorox was oversold. The money flow was coming out of it. I come over to the right-hand chart. I'm looking for a ready, set, go, and I got it right here. Now, it had a couple up days, and then it started heading back down. It crossed over the ribbon. This is a measured move to the downside. A measured move is, on the downside, is lower highs, lower lows. It's the definition of a downtrend, lower highs, lower lows. It came down to the 127, it stalled a little bit, came down to the 161, and I sent out a text and email alert to all my members today to go ahead and take profits. Go ahead and take profits. We got in with an April 135 put at 175, and we exited today at 303. 303 gave us a 72% gain in from 322 to 46. That's what we're looking for. When you're in options and you're buying options, you're looking for a quick pop. When you get that quick pop and you pass through a Fibonacci number, you exit. You take your profit and get out. One other I want to show you that we are still in, and that is Starbucks. Starbucks is down just a little bit today, but Starbucks was oversold. It had support. The money flow started coming back into it. We had a change of color, ready, set, go, and we got in right here. We got in on 317. Now, we are still in this. We have a May. The other thing I wanted to do on Clorox is Clorox we had in April, and Clorox April expires on the 20th of April. So we wanted to take our profits and get out, because if the option just sits there and languishes up, down, up, down, up, down, that premium's going to erode very rapidly. So it came up to the 127. I'm thinking we got a lot of resistance up here, but I've got a little bit more time. If it sits there and languishes for a couple more days, I'm out. I'm out. We're up 28% on this trade already. So I'm okay sitting here for a little bit, but if it turns around and it languishes right here, I'm out. Okay, that's the one side of Options Pro, and that is buying calls and puts when we see everything going our way. The other side of Options Pro is selling premium, and I sell premium on the big boys. The big boys are the RUT. The RUT's at 1360. Okay. I want to look at Amazon. Amazon is at 899. Okay. The reason why you want to sell credit on the big boys is they have a lot of credit. There's a lot of credit there because they're expensive. Okay. And what we're doing is by selling premium, and we always do this with vertical spreads. I never sell naked. You look at selling naked, and the first indication is, man, if I did that, I would make a lot more money than selling a vertical. Why do you selling a vertical means you're buying, you're not only selling one, but you're buying one a little further out of the money for protection. But what we're taking advantage of is this rapid decay in the last 30 days, and especially in the last week. You can see how it's exponential, and that's what we're trying to take advantage of. Again, for selling premium, I use the regression channel. What I like to see is are we in a trend? Are we channeling? If we're in a strong trend, I don't want to be selling premium. Well, how do I know that? That's when I use the Aroon indicator. The Aroon indicator basically tells me this red is the bearish Aroon indicator, and it basically says over the last 25 days, I have had X number of new lows, okay? And then it divides by a number and it comes up with a fraction here. So I want to see, when I want to do an iron condor, let's say, where you're selling a bull put and a bear call, you're getting double the credit. What I want to see is both the indicators, the Aroon indicators, going down. Okay, this is a great time. You can see that the bearish was going down, and so was the bullish going down. This was a super time to be selling premium. Super time to be selling premium. This is not a time to be selling premium. That's the time to be getting into your call opportunities. So the Aroon indicator helps me to determine whether I should try to do an iron condor, or why don't I do a bull put vertical spread right here? Or why don't I do let's see, here I'm pegging right here. Why don't I do a bear call right about here and let it drop? The Aroon indicator is what I use to determine, do I want a bear call? Do I want a bull put? Or can I put up an iron condor? Okay. Now this is just an example of a trade on the RUT. You can see the Aroon indicator was definitely trending, showing a trend in the calls, this showed new higher highs. Okay, and that's a good time to put on a bull put spread. We put that bull put spread on, and I always go with the 10-point spread, and look at that credit, $1.70 worth of credit. And we got out about 2 weeks later. It had dropped down to 45 cents. So that's the difference you're going to get. And that's very close to 100%. Here's some actual trades. I'm going all the way back to October 2015. 2015. There was an iron condor we put on, made 105%. Here was a bear call, 150%. Bear call, 55%. Bear call, 120. Iron condor, 110. Bull put, 130. Bear call, minus 170. It happens. It happens, okay? Then we came right back with a bull put 140, an iron condor 30. These losses do happen. And what you have to do is make sure that your trade amount is such that it's not if you have a loss, you should expect a loss. It's not going to really affect your portfolio that much. That's how you want to do this. Okay, let me just show you what I'm looking at right now on the RUT. On the RUT right now, you can see that the bullish Aroon is down. The bearish is heading down. This is what I like. This is a perfect time to put on an iron condor on the RUT. And I'm looking at May. Let's see, I'm looking at May, and May is 42 days out. Okay, perfect time to be doing this. What I'm looking at doing is an iron condor is nothing that more than a bear call. So I'm selling the 1450 and buying the 1460, and a bull put where I'm selling the 1260 and buying the 1250. That's how I'm setting up the theta trade for the month of May. Now, in 2014, I started and said, okay, with this strategy, with the combination of the puts and the calls for trending markets, and the combination of the theta trades, selling premium when it's channeling, how am I going to do? How am I going to do? And I was looking to make 100%. You can see I ended up the year at 138.5% for that portfolio, doing calls and puts and selling premium, versus 12.5% on the SPY. So I said, well, okay, I'm going to continue doing that. 2015, I only made 85%. 2016, I just turned 109%. And we're doing very well this year. Very well this year. So then my question to you, or your question to me, should be, so how do I learn more? How do I learn more? What I want you to do is go to my website, www.optionsinfinity.com. www.optionsinfinity.com. These are webinars that you can look at for free. Options 101, options leverage, financially strong stocks, setting up your charts. How do you, for a portfolio, how do you determine what the proper trade size is to trade like a professional? This is an excellent webinar that I did on the psychology of trading. You got to check your ego at the door when you're going to be a professional trader. Here's a regression channel, Fibonacci and measured moves, macro MACD. And here's my three programs that I have, just the basis for them. All you do is come down here and click under free membership. Give us your email address and you get unlocked to view all that information. You like it? You like it? You come down here and you find out about Options Pro. You find out more. Okay, this is a SPX war. This is where I sell premium against the SPX. This is the ETF hedge program. Here's some quick stats on that. Here's the system specs. Okay, so, and then here's some testimonials from some of my members. What I want you to do is go to www.optionsinfinity.com, sign up for a free member, try me out, see if you like it. If it makes sense for you, come join me in one of my programs. You'll be glad you did.